Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Ulster released its April data for the London market this week, which is sure to make headlines as London erased all of the price gains made since the beginning of 2022. For the second time in as many months, real estate prices in London fell, with the average and median price falling below not only that of March, but also that of January. This news comes amid reports and predictions that London's real estate prices would continue to rise, even while there's growing evidence that the rest of the real estate markets in Canada are slowing. So what I want to do today is go over London's sales data, look at some of the evidence of a slowdown in the rest of the country, discuss the effects of rising interest rates on our real estate market, and then go over what to look for next. Well, the Bank of Canada won't be raising interest rates until at least June 1st, hopefully. Canada's inflation rate will have a big impact on the severity of those interest rate hikes. We'll obviously have updates out when we get that inflation data in. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into April's data. So, April's data. The average price of a home in London plunged to $747,000 in the month of April. This is down from March's average price of $807,000 and also below January's average price of $773,000. So we're seeing a big plunge in all of those average price gains that were made over the past few months, which obviously made headlines. They've all been erased in the month of April. Similar pricing came in for the median price of a home in London. The median price, that's where half as many homes were sold for over that price and half as many were sold below that price. The median sale price in London in the month of April came in at $703,000. That's down $72,000 from the $775K that was March's median price, and also down from January's median price, which was $753,000. So, huge price losses in London in the month of April, not only from March, but also from January. Again, all of the median house price gains that we've seen over the past few months were all erased in April. And this carried on to the sales to the list price ratio. That's the ratio which shows how much a home is going over asking price. So if a home is listed at 100K and it sells for 110, the sales to list price ratio would be 110. We saw that fall as well in April, with houses going for much less over asking than they were prior. In March, the sales to list price ratio was 121.6, and in April, that had dropped to 115.5. So the average price of housing in London dropped. The median price dropped. Homes are going for much less over asking than they were before. They're still going for over asking, but on a much slower pace. We're definitely seeing a major slowdown in the real estate market in London. And houses are also staying on the market for longer. The median days on market in March was 7, and that number jumped to 8 in April. So houses are also staying on the market longer, taking longer to sell. So while Londoners, at least for the past few years, have been accustomed to seeing consistent price rises, even in the past few months, major price rises throughout our market, we're starting to see major price reversals, major price decreases, and I expect that we're going to continue to see this further down the road as well. And it's not just London, we're starting to see this throughout the country more and more. While we don't have all of the data in yet on the rest of the country, as it's still early, we do have some preliminary results. House Sigma, for its part, shows that the median price in Toronto was actually down 12.1% in the month of April. We also have evidence from BC that they're seeing a major slowdown as well. One realtor that was interviewed noted that at one point before, people would ask, what do I have to do to get into this property? And now it's, let's wait for a few days for a price drop and then we can move forward. First National, one of the main non-bank mortgage lenders out there, also noted a 3% decrease in mortgage originations and mortgage applications. So in London, in Toronto, in BC, and in the mortgage industry, we're seeing a slowdown of this real estate market. And there's a very good chance it's largely due to these interest rate hikes. The Bank of Canada over the past 2 months has hiked interest rates 75 basis points, and it's quite likely they're going to hike interest rates even further in June and probably July as well. So a lot of buyers are sitting out of the market. There's not as much demand out there as there once was. And if you were planning to sell your house at the peak of the market, you're going to put your house on the market now, hoping to cash in while the getting is good, if that time has not already passed. So I think we're seeing much more supply out there, and greatly reduce demand, and as a result, we're going to continue to see more and more price decreases as this goes on. And if interest rates is what is causing these major price increases, and I think that it is, I think there's substantial evidence that this is very much interest rate induced, the end of cheap money. So if that is the case, then we can expect a further slowdowns if interest rates continue to rise, if our inflation rate is around that 7% mark. If our inflation rate gets to that 7.5%, I would expect the Bank of Canada to move quickly and raise rates by 50 basis points, maybe 75 basis points come June 1st, which would be a doubling of the interest rate hikes that we've already seen, which in London has caused our real estate prices to erase all of the gains made in 2022. That's a big deal. That's a big reversal. And I would say look to the inflation rate to get an idea of how fast the Bank of Canada is going to go and how much more reversals we can expect to see here in London. We'll obviously have updates on those rate increases and on that inflation rate on this channel, and of course on the real estate market. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.